My name is Michael Odundo. I'm a research analyst in the research department at Standard Investment Bank. For the month of November, we saw quite some activity in the market brought about by earnings releases by various firms in the market, ranging from banking stocks to Kengen to Centum. In addition, in the month of November, we saw inflation drop for the first time in around 9 months since February 2022, and it came down to 9.5% from 9.6% in October. These may just be initial signs of some cooling off in inflation, hence positive for the market. On Kengen, we saw improved profitability where the earnings per share more than doubled by 157% to 0.72 shillings. The counter also announced an interim dividend of 0.2 shillings, which brings the dividend yield to around 6%. The performance was brought down by a 134% jump in reimbursable expenses, and this was largely due to higher use of thermal since there was low hydro during the period. On Centum, operating profits declined 43% to Kenya shillings 244 million, and this was brought about by lower investment income. The company also posted a negative total return of 1.2 billion Kenya shillings. Positively, the company has announced share buyback, and this will be done over a period of 1.5 years, and the maximum price will be 9.03 shillings. All the benchmark indices for the month of November all closed in the red, led by the NSE 20, which sustained losses down 2.4%, largely on the price downturn of some large caps. On a similar note, the NSE, which is the index that encompasses all the listed counters on the exchange, was down 1.8%, and this was largely brought about by the downturn in Safaricom, which was down 3.0%. Safaricom has a high weighting on the index at 49.5%. Positively, turnover in the market was up 8.0% to Kenya shillings 6.3 billion. In dollar terms, the market posted a negative return of negative 2.5%, though this was slightly better than Egypt, which posted a negative return of 4.2%. On the other hand, countries such as South Africa and Nigeria posted positive dollar returns of 16.5% and 7.6% respectively. In the top movers list, we had our usual large caps. This was Safaricom, Equity Bank, EABL, among others. Positively, in comparison with the last month, we saw most of the counters close in the green, and these are 6 out of the 10 counters close in the green, largely attributable to banking stocks, which closed higher as investors reacted to their positive earnings. Notably, NCBA jumped 5.4% to K33 shillings as investors reacted to a near doubling in their earnings per share on third quarter. On the other hand, we saw Kabasid come down. It was the leading laggard in the list. It came down 9.2%, and this is post-dividend. We generally see prices of counters come down after the dividend book closure date. In the top gainers list, at the very top we had Home Africa, followed by Unga Group, followed by HF Group. Interestingly, banking stocks dominated the top gainers list by sector. We saw counters such as NCBA come up 5.4%, followed by Stanchart up 4.3%, followed by ABSA and DTB. And this is as investors reacted to the positive third quarter earnings, in which net income went up by double digits. Notably, we saw Stanchart come up 4.3% as investors reacted to the lender's announcement of an interim dividend of 6 shillings, and this was 20% higher in comparison with 5 shillings in the previous year. In full year, we expect a total dividend of around 20 shillings, and this brings the dividend yield to around 14%. Notable top losers included TransCentury, which was down 23%, Kenya Power, which was down 19%, and Jubilee, which was down 13%. Importantly, TransCentury has a rights issue going on, which seeks to offer 5 new ordinary shares for every 1 share held by a shareholder, and the dividend book closure date for this rights issue is on 13th December 2022. On Kenya Power, we saw the counter come down after it posted a 37.5% decline in profits before tax in its full year earnings, and this was largely occasioned by higher interest expenses on their foreign currency denominated debt, as we saw the Kenya shilling weaken against the dollar. That's why we saw Kenya Power start to come down. We also saw Jubilee touch a near decade low of around 187 shillings. We also positive on the banking sector in general, also counters such as Stanchart, NCBA, KCB, ABSA, DTB, and this is on the back of improved earnings. We've already seen them post higher than expected foreign exchange income, which we might see start clawing back next year, but they'll be rescued by higher interest income from what they're lending out. We've seen the central bank raise the benchmark interest rates, which in turn enables the banks to lend at higher interest rates, thus booking a higher margins from the loans they churn out. And we're also positive on ABL.